In this session, we will use top-down analysis, which is a more complex way of analyzing the markets. The top-down strategy 1 hour is a powerful trading strategy, and for this strategy, we will use all the indicators you've learned so far. We will start by looking for trend direction on the 4 hour and the daily chart. Remember, always look for trend direction on the longer time frames. And then we will switch over to the hourly chart to add the stochastic and the moving average indicators. So let's put this into action. Let's open the Euro-US dollar currency pair on the 4 hour chart. Here you can see this currency pair is an uptrend. So to trade in the direction of this upward trend, let's open the hourly chart to do our chart analysis. The long-term trend on the 4 hour chart for the Euro-US dollar is bullish. So therefore we will wait for a retracement on the hourly chart and then enter a trade in the up direction. Let's move over to the 1 hour chart of the Euro-US dollar and look for a reversal candle pattern, either in the form of a hammer candle or an engulfing candle at this strong support level. Look at all these reversal moves in this uptrend. A reversal here, another one here, this is one here, and this one here is a decent reversal. Market came right down to this support level here. This is a strong support level, a perfect example where previous resistance became support. This hammer candle right at this support level is exactly the type of signal we are interested in a pullback like this. It's clearly standing out with no candles on either side of the hammer to compete with. The 3 rules when trading hammer candle patterns. Rule number 1 is the color of the hammer doesn't matter. As long as the wick of the bullish hammer points to the downside and the body of the hammer is at the high end of the candle. Rule number 2 is the body of the candle must be shorter than the stick or the wick of the candle. And the third and very important point is the hammer candle must stand out. Now this hammer here meets all those requirements. So here are our first 2 indicators to indicate this currency can possibly resume its uptrend. We have this strong support level here, and now we have a reversal formation in the form of a bullish hammer right here. The confirmation candle is an important element of this strategy. So for a bullish or a buy trade, the confirmation candle must be green. The confirmation candle is the candle immediately following the bullish hammer. Stochastic is our momentum indicator. Stochastic must be in an oversold situation, like here, and then rises above the 20% control level with both stochastic lines. Here, stochastic is positioned perfectly and indicates sufficient bullish momentum. This is a perfect setup so far. Let's now add a moving average filter to our charts. We will use the moving average 7 and 8 crossover to indicate momentum is shifting from a bearish pullback to a bullish trend. At the end of this session, I will explain how to put these moving averages on your chart and how to change the value of the moving averages. The black line on your chart is the 7 exponential moving average, and the blue line is moving average 8. To show upward momentum, the moving average 7 must cross moving average 8 from below going up. It's important that these indicators happen in the following order: reversal candle at a strong level, then the confirmation candle, and then the momentum indicators. Now here we have 5 powerful indicators to give us an indication that this currency pair will resume its uptrend. To fine-tune our entry and find the exact point where to enter our trade, let's open the 15-minute chart and add the moving average 50 onto the 15-minute chart. To enter your trade, a bullish candle needs to close above the 50 moving average, just like here. We will only enter our trade once the candle has closed on the 15-minute chart. And don't jump in too quickly. Wait for the 15-minute candle to close before you enter your trade. The more conservative approach, however, is to wait for a confirmation candle, which is this green bullish candle here. The stop loss for this trade will go at the lowest point of your hammer candle on the 1 hour chart, and your take profit target can be any of the following options, either a fixed take profit target of let's say 20 pips. Or you can take your profit at the next resistance level. Now let's look at an example of a sell trade. The trend on the New Zealand US daily chart is down. So our bias for the New Zealand US dollar is selling. This is a perfect example of the top-down trading strategy. So we want to see a bullish reversal move to a previous resistance level, and then we will look for a possible reversal signal in the form of a bearish hammer candle or a bearish engulfing pattern. This is a beautiful engulfing pattern. An important point to remember is that hammer candles and engulfing candles has little to no significance in a sideways market. Good. Let's zoom out to see if this engulfing pattern occurred at a significant resistance level. This is a good level. Market hits this resistance level here and bounce back. It tested it here again, bounced back, and now it's retesting the level right here. The engulfing candle here at this level is a good indication that the market can resume its downtrend. But we need more confirmation. An engulfing candle at a strong level is just not enough. So we will wait for a red bearish confirmation candle. Then we need to see stochastic move below the 80 control level, which will show strong momentum to the downside. And then we have the moving average crossover right here. Now we are ready to move to the 15-minute chart and find our suitable entry point. For this sell trade, price needs to close below the yellow 50 moving average filter. You can enter your trade on the close of this candle here, or for the more conservative approach, you can wait for a confirmation candle, which is this candle following the candle that closed below the 50 moving average. The stop loss will go at the higher end of the engulfing pattern on the 1-hour chart, and the take profit target can be any of the following: a fixed take profit target of, let's say, 20 pips, or you can place your take profit target at the next support level. In the next and final session, I will show you step by step how to place a trade and how to enter your stop loss and take profit target. Where the price action and the confluence strategies are trend continuation strategies, the top-down strategy is a reversal strategy, and you can trade this strategy successfully on any of the major and minor currency pairs. So let me quickly show you how to add the moving averages to your charts. Come over here to Navigator, left-click Navigator, and left-click Indicators. Scroll right to the top, and then double left-click Trend. Double left-click Moving Averages, and under the heading Parameters, change the period to 7. And under Moving Average Method, you can choose Exponential. Change the color to black, and then hit OK. Let's now add the second one. Go up to Navigator and double left-click Moving Averages. Change the period to 8, and now I want you to add a shift of 3, which means you are predicting the market 3 candles ahead. Choose Exponential and change the color to blue, and then you can hit OK. And there you are. You have your 2 moving averages on your charts, and we are going to use moving averages to time our trades. This is very, very important stuff. Down here, you have your stochastic indicator, and up here, you have your moving averages. So let's save this as a template. Left-click Templates, and you can name your template Top-Down Strategy 1 hour. So let's design our trading checklist. We will start with our sell trade checklist first. Look for trend direction on the daily chart and then step down to the 1-hour chart to find resistance. To confirm reversal, use the bearish moving average crossover. The moving average crossover must first happen before you can switch to the 15-minute time frame. On the 15-minute chart, a candle must close below the 50 moving average filter before you can enter your sell trade. The stop loss for this trade will go at the high point of the hammer candle, above the resistance level. And for your take profit target, you can choose any of the options below. It can either be a fixed take profit target of, let's say, 20 pips, or it can be a take profit at the next support level. Let's now look at our buy trade checklist. Again, always look for trend direction on the longer term time frames, and here we will look at the daily chart. Then move over to the hourly chart to find support. Stochastic need to be in an oversold position. On the 15-minute time frame, we want to see the market close above the 50 moving average. Your stop loss will go just below the support level at the low end of your candle formation. And your take profit target can be any of the following options. Either a fixed take profit target, or you can take your profit at the next resistance level. In the next and final session of this course, I will take you step by step through the process of how to enter trades and how to place your stop loss and your take profit targets. See you in the next section.